And we start off with Tesla in turmoil. The EV stock plunging more than 6% today, hitting its lowest level since mid-November and locking in a 5-day losing streak. The stock has lost a third of its value since setting a record in December, retracing more than half its post-election rally. The latest round of losses coming amid a slew of potential distractions for CEO Elon Musk, heading up Doge. Here he is, in fact, today in the Oval Office with the president as well as his son. Then there's his $97 billion bid for control of OpenAI. And, of course, his nonstop posting on X. On top of that, there's concern over the slowdown in Tesla's core business. The company seeing sales in France, Germany, and China plummet to start the year. Bulls seem to think the push into self-driving will be the next positive catalyst for the stock. But will that be enough to give Tesla the edge over the competition? What are we looking at here when we take a look at this slide, Dan?
I didn't look at the slide, but that's a cute kid over there. I got to be honest with you.
Super cute.
You know, listen, on the last call about a week and a half ago, I mean, Elon really didn't spend a lot of time talking about, like, the car sales and what's going on in Europe. And, you know, we're down here in the U.S. also, and it doesn't look like they're going to make their deliveries this year. I know it sounds really early just to kind of extrapolate what they did in January, but we know they're in a price war. We know that there's threats about tariffs. We know that, you know, these EV credits could go away. We know that price war that's been going on for 3 years is not abating anytime soon. But what he spent a lot of time talking about is robots and robotaxis and how that is going to inflate the price of this stock. And so when I think about what's going on right here, if you bought the stock on the breakout from November 5th, and it was nearly a double from November 6th to December 18th, you know, you have to believe in his proximity to the president and the White House and what that might mean for deregulation is going to help all the things that he's not focused on right now. They're not making a low-end EV to compete with some of the low-end competition that's coming from China and other places. So at the end of the day, if the promise was that we're going to get to full self-driving, then we're going to get to robotaxis, it's going to happen sooner than you think. And oh, by the way, this Optimus thing is going to be really helpful in making all this stuff, and you can buy one too, and you can have it in your house. That's not happening anytime soon. So when you think about this stock, I mean, it really could round trip the entire move back to November 6th because the fundamentals of the car business are not particularly good, and they're only getting worse right now.
There are a lot of things to come. And yet BYD today announces its self-driving offering, and it's called God's Eye, across all models, and not for an additional fee, which Tesla is offering in terms of full self-driving. They're starting at a very low pricing point. They're going across 3 levels. And this could actually force, you know, the rethink in terms of these services. Are we going to charge for them or not? And there might be pressure to not charge for them.
The whole yes, absolutely. And, you know, January 29th was a Wednesday. We were here together. Tesla reported earnings. Margins were a disaster, the worst margins in over 5 years. And I said to you that night, if we had played the game, if you had told me last night this was going to happen, where's the stock? I said it would have been down $50. It was not. As a matter of fact, it got up to about $4.15 or so. Now here's the $50 in the rearview mirror. I'm not sure why the market's deciding now to sort of punish them on what I think was the back of that quarter and some of these headlines, but I do think it's justified. And Dan talks about round trip. Yeah, maybe. We stopped today at about the 150-day moving average. It's a normal place for us to bounce. But, you know, fundamentals matter. The fundamentals, to me, suggest lower.
Tim?
It's always been a story of we're betting on the concepts and we don't necessarily have delivery. I mean, energy storage is another one of these things that the analyst community got really excited about. I mean, ultimately, the revenue number missed pretty badly. Yes, there were some positives on the margin, but then there was, and you know, let's point to the lowest cost of goods sold on record. And there's some dynamics that I think are things that the bulls can point to. I just take it back to what's the company worth, and it's much like we're going to have a conversation about, you know, Chairman Powell, and they can only price in tariffs when they actually see the impact. I'll price this into the model when I actually have these revenues, not where I think growth could be. That's always been my story here. You know, the current PE is north of 150, even after some of this pullback. That's what it comes down to. Again, there's a lot of moving pieces. There's a lot of unknowns. There's a lot of upside. There's a lot of excitement. There's a lot of core businesses that certainly are hard to put a number on. And that's exactly right. I'm not putting a number on them.
Today, the action was not very good, Katie, on very heavy volume. It finished at its lows.
Yeah, so it took out some support around 350. It does follow a major breakout, though. That was a big resistance level for it to get through post-election. So we think this is a counter-trend move and ultimately something that will yield a buy-in opportunity. Believe it or not, because it ran up so quickly, though, it is not oversold yet from an intermediate-term perspective. We have no counter-trend buy signals, so we think it'll take some time to get there.